Welcome, ladies and gentlemen, to Swiss Resource Capital, our virtual roadshow edition. And today we have Discovery Silver here, you know, the world's largest silver development project with favorable, sizes, with favorable numbers. And we have Singh here, the CEO, and Forbes, Gemmell, who is the IR responsible guy for Discovery Silver. Welcome, gentlemen, and good morning to Toronto. How are you?
Good to see you.
Good to be here.
Yeah, thanks for joining us here, as we have to look a little bit that our participants have to dial in, and let's give it some seconds here. As always, I have to do some remarks legally. Yeah, first of all, as you know me all, my name is Jochen Steiger. I'm the CEO and founder of Swiss Resource Capital AG here from Heresau in Switzerland, and also Commodity TV and Rohstoff-TV. And yeah, it's my honor and pleasure to run you through this session today. Of course, we are fully complying to Swiss, Great Britain, and European data security laws. Nobody can see each other, and no names or emails are displayed. We want to have like 20-25 minutes presentation with the two gentlemen, and afterwards, of course, we want to have a lively Q&A session as always. Please use the chat function to type in your questions, and I will moderate then that afterwards. So let me check on the attendees. Yep, that's running. Okay, fine. So let me bring up the presentation, and I would suggest, Tash, the floor is yours. I think you are beginning, right?
Fantastic. Yes, I will. Yeah.
Perfect. Super. So please give us an update.
Perfect. Thank you, Jochen. Thank you for having us. Thank you all for being here. I'll give maybe a quick bio on myself, and then Forbes Gemmell, who's our VP Corporate Development, will also be giving a quick bio. So I've been in the mining industry my entire career, over 20 years. That spans from all the way from exploration, development, and through to production. I was an engineer with Inco, which is now Vale, for 10 years. Then I worked in capital markets as a publishing equity analyst for some years, and then went back to the corporate side. Was VP business development and VP engineering for Timmins Gold. And then now it's been about 4 or 5 years. I've been the president and CEO of Discovery Silver since its IPO in late 2017. Engineering background as well as a financial background for myself. Forbes?
Yeah, thanks, Taj. So yeah, I have more than 15 years experience in the mining space. Actually started off in Australia on the buy side, working for one of the big mutual funds there. And then when I moved to Canada, moved to the sell side. I was a gold analyst covering gold stocks, and then moved into the corporate side of the mining world, probably close to 15 years ago. And a good mix of involvement with exploration companies, operating companies, development companies through that experience. And I joined Discovery about 2 years ago now. So back to you, Taj. I'll let you sort of kick things off here.
Fantastic. Thank you all. So I'll begin the presentation, and where we'll be talking about our Cordero project located in Chihuahua, Mexico, which we believe is the world's newest Tier 1 silver asset. And we will be really focusing on the company update. We won't talk way too much about silver. We all know the tailwinds for silver are very strong. And if you ever want to talk to anyone about that, Jochen knows that more than any other. We'll give a company update here. There will be forward-looking statements in the course of the presentation, and just getting right to the big 3 points why we really think Cordero has quickly emerged as one of the most important silver projects in the world. First of all, the size. We recently put out a PEA in November 2021 that really showed and displayed the size of what Cordero could be. Over 26 million ounces of silver equivalent production over a 16-year mine life. Long mine life, big, sizable production. In many years, that's well over 30 million ounces silver equivalent, which would make it the largest silver mine in the world. Moving on to margin is the second reason why we really think Cordero is really becoming one of the most important silver assets out there. Margin, life of mine, all-in sustaining costs of $12.35 an ounce. So on the operating side, very good, but also on the NPV, the Capex side, kind of a ratio, talking about capital efficiency, a ratio of 3.2 times. And that's, again, based on $22 silver, conservative price used for silver there. Forbes will be talking more about the economics there, but Not only is the operating cost very palatable, but the NPV to Capex ratio, typically 1-to-1 is considered quite good. 2-to-1 is very strong. This project has a 3.2 times ratio. And looking at scalability, the project is very large in and of itself, as we talked about. But outside of the main PEA pit area, there is an additional close to 400 million ounces of silver equivalent that's not included in these numbers I've talked about before. So if silver went up into the high 20s, all of that would now become economic and the project could get much, much larger. So it's really showing that you've got very strong downside protection. This will be a mine, but if silver moves into the high 20s and into the 30s, the project can get even larger, clearly making it the world's largest, potential to be the world's largest silver mine for many, many years. Looking at the basics of Discovery Silver, where we're located is in Chihuahua State, a very well-known mining state in Mexico, just below the US, so northern Mexico, on a major gold-silver belt. Some of our neighbors are shown here, but this region has a very strong reputation of hosting long-lived, robust mines. We are at the PEA stage and now moving to a PFS stage. We put out an updated global resource in the fall that showed over 1 billion ounces of silver equivalent in the global resource, and over 90% of this was in the measured and indicated category, which again speaks to how de-risked and advanced this project is. Our cash position is sitting in around Canadian $70 million, obviously no debt, so it puts us in a very strong position to advance this all the way to a construction decision and actually have a very good sizable amount that would be able to contribute to the capital for this project as well. Quickly, a summary of the capital structure. You'll see from the pie chart, we're roughly about a third of retail, third institutions, and 25% is owned by Eric Sprott personally. We all know he's a very avid believer in silver. He's been a great shareholder to have. And also founders, management, and board are at 10%. Definitely have some incentive to really see the company succeed. Note on Eric Sprott is that we are his second largest investment in the silver space after First Majestic. His top four is First Majestic, us, Mag Silver, and Silvercrest. So obviously very good company to be in. You'll see also the share price chart below, ups and downs over the past little while, but generally over the past couple of years, very strong chart, very good support. And also, as I noted before, a cash balance you'll see of close to $70 million. Market cap sitting in and around 600 million or so Canadian. Looking at the project, for a project to succeed, it can have all of the quantitative characteristics in terms of tonnage, grade, etc. But the qualitative characteristics are just as important, if not even more important. And we think Cordero definitely has those attributes to eventually become a mine. First of all, it's 100% owned by us. No JVs, earn-ins, option agreements, 100% owned by us. Nice and simple. The land package is very large. You'll see here in this image, the red area represents the pit where my arrow is. And you'll see there's 35,000 hectares around that. That is all ours. The resource area only occupies about 800 or so hectares, 700 or 800 hectares. So we definitely have a lot of room for layout, logistics, further exploration all around us. Local infrastructure couldn't be better. Power line up one side of the property, as you'll see here on the right of our land package. On the east side and on the west side, you'll see a major highway, 4 to 6 lane highway. So again, very good for layout and logistics. Obvious advantages for operating costs and capital costs as well. Topography is fantastic as well. Nice rolling, classic northern Mexico topography, perfect for an eventual open pit mine. And we're also located in rated one of the best states for mining in Mexico, the Chihuahua state, very pro mining. And again, as you saw from the image I showed before, how many mines are really in the area is fantastic. And those are just some of them. There are a lot of other artisanal mines as well as private company mines that are in and around the area. And I talked about exploration potential previously because of the size of our land package, but we've already identified over 10 very compelling, interesting targets that have not seen any drilling. This year, we're very excited to be able to do our first drilling on these. You'll see the orange areas represent, these are targets where we're kind of sourced and vectored from. They're interpreted intrusive centers, so potential sources of mineralization. And you have to think with such a large deposit sitting right here in the middle of the property, there's a high potential for other discoveries on the property package. So we're very excited about that. Looking at the project timeline, you'll see through 2021, at the end of 2021, we put out a brand new resource estimate, which I talked about, and a brand new PEA. We started our phase 2 drilling in the summer. So phase 1 drilling seamlessly went into phase 2. Phase 1 was just what went into that resource estimate. So there's obviously more drilling now that will feed the new resource estimate and the PFS. We aim to release the PFS in and around the third quarter, late third quarter, / early fourth quarter of 2022. So we're working hard moving that forward. We'll begin construction permitting this year. And also I talked about the property-wide drilling of these regional targets, which looks very interesting, that we'll be working on. As we put the pre-feasibility study out, we will then move towards phase 3 drilling, which we don't expect to be a lot. We're actually going to de-risk this project and advance it quite considerably up to this point. So I'm just going to close my Outlook here. Sorry about that. Okay, perfect. And then we obviously want to move towards midway through 23, having a feasibility study and construction decision. I will now pass it off to Forbes, who will lead us through some highlights of the recently released PEA. Forbes.
Thanks, Taj. So yeah, we put out the PEA at the end of November. And in terms of highlight numbers, so we had a base case scenario. We ran that at a silver price of $22 per ounce, and that generated an NPV of $1.2 billion. So that's equivalent of basically $4.60 per share. The internal rate of return was 38%, and it had a very attractive payback of 2 years. If you take the silver price up to $27.50, obviously it's traded above that recently, and obviously we're hoping that it'll trade well above that in the future, but that takes the NPV to close to $2 billion. The IRR is now 55%, and then the payback is actually less than 1.5 years. So overall, exceptional metrics coming out of the headline numbers. And what we've outlined also, not only as part of those headline numbers, is what we feel is a tier 1 asset. And when we say tier 1 asset, it's a term that gets thrown around quite a bit, but we're talking about a long mine life. So we've got a 16-year mine life in this case, sizable production. So 26 million ounces silver equivalent. That would put Cordero as a top 5 primary silver mine globally, and low costs. So we've got an AISC of less than $12.50 an ounce, which would place Cordero in the bottom half of the cost curve. The other important things to note out of the study is we sort of make this claim as technically robust. It's a preliminary economic assessment. Often they can be quite loosey-goosey. In our case, we had some of the top industry consultants vet the study. And on the technical side, it was based on a very detailed metallurgical test program. And then the resource that supports the mine plan, 99% of those tons were in the measured and indicated category. So they're the 2 categories with the highest level of confidence. And then the other important thing to note, just in terms of silver representation, as you may know, silver typically comes with other metals, either gold, lead, zinc are the more common ones. So in our case, Cordero, in the first 5 years, silver makes up 60% of revenues, and over the life of mine, more than 50% of revenues. And when you actually look at the major silver producers, their silver contribution is actually in the 30 to 50% range. So our silver contribution is very favorable. The next biggest metal contribution is zinc, which probably makes up 25-30% of revenues. And interesting to see that the zinc price, has been doing very well lately. And again, similar to silver, as well as zinc, these are these green energy metals. There's forecast for huge demand from both these metals over the coming decades. I mentioned the size and scale of Cordero, and I think this graph puts it in context. And so what we're showing here with these columns is the level of production. So the first 10 years of the mine life at Cordero, we're producing more than 30 million ounces silver equivalent. Now, you compare that to Core, Hecla, and First Majestic, that level of production is identical to all those companies, but those companies are generating that production from 4 operating mines. Obviously, in our case, all that production is coming from the one mine. So it gives you a feel for scale. And then when you actually look at the market caps, especially at First Majestic, where the market cap is up around 3.5 billion, our market cap is around 500 million. So obviously they're in production, we're earlier stage, but it gives you a feel for some of the valuation gap that we can continue to bridge as we de-risk and advance the project from where we're at now to delivering feasibility studies and then through to construction and production. And not only does it have big production, like I said, but when you look at the all-in sustaining costs, the study showed an average of $12.35 per ounce life of mine. So that compares very favorably to the main silver producers. And certainly when you look at silver price, around $24 per ounce today, it's had a nice couple of days here. So that's an operating margin around 50%. And obviously if silver prices keep going higher, this is going to be a highly profitable operation over a very long mine life, generating huge amounts of cash flow. I'm just going to finish off here with a couple of slides. One, we sort of already talked about the commodity price sensitivity, and we're showing here the flexing of the NPV, IRR, and payback at different silver and zinc prices. So this gray box here in the middle, that's our base case. So that's the 1.2 billion NPV, 38% IRR. If you stress test that and you take silver down to $18 per ounce, zinc at $1.05 per pound. So basically now we're looking at the top left corner here. You can still see the project has a 715 million NPV and the IRR is still close to 30%. But then obviously if you go the other way and you then look at silver at $30 an ounce and lead at $45 per pound, the NPV is now 2 billion, IRR is close to 60%. So there's exceptional torque here, especially if we see these tailwinds for silver and zinc play out, which I think there's very strong demand to indicate that will happen. And we're just going to finish a final slide here just for context. So most silver deposits are vein deposits mined by underground methods, and it's very hard to find big open pitable disseminated silver deposits. And so what we've done here is sort of show the top 10 largest undeveloped silver deposits. We're ranking 3rd on that list. We've got almost 500 million ounces of pure silver in our deposit. And it's interesting when you look through this list, there's a combination of projects that are either held in companies where it's hard to get exposure to, whether it's sort of government of Tajikistan or some of these bigger companies. There's projects in challenging jurisdictions, or there's projects that are held by companies that aren't aggressively advancing the project. And so we feel we are quite uniquely positioned in that we have a very big project here. It doesn't have a lot of capital intensity. We're aggressively moving it forward. And you as an investor can get direct exposure to that through investing in Discovery Silver. And obviously taking advantage of those silver tailwinds, which we think will play out. So Johan, that's the presentation. Happy to hand it over to you now in terms of managing the Q&A.
Yes, absolutely. Thank you very much, Tash and Forbes, for the presentation here. As we already talked about, it's a very clean and clear company, I would say, and it's very obvious. So let me see. Okay, I have to read through a little bit here. Let's start with an easy question. Do you think you will do any hedging in the future? Let's say, like, do you want to do for the financing also probably any streams like that?
Forbes, you want to take that?
Yeah, sure. So look, our two biggest shareholders are Eric Sprott, and then there's a fund out of the UK, Jupiter, both of whom are very, very bullish on the silver price. So obviously, if we sell a stream on the silver revenues, we're capping some of that upside. So look, I would say that financing through a streaming option is probably lower down our priority list. Given the upfront Capex to build it is sub 400 million, we're hoping we should be able to do that through a standard equity and debt. And then maybe there's an offtake arrangement, given we'll be generating concentrates. Maybe there's an offtake financing that comes along with that too. So yeah, it's probably not our top priority given the sort of forecast around the silver price, which we think will play out.
Okay, so there's another question which I think leads a little bit to that, because I wanted to ask that also. As you have helped to build the company from scratch up, is there a minimum share price market cap that you have in mind that you would be open to having a takeover or merger discussions? And do you worry about takeovers coming before you have a chance to see the fruits of much higher silver prices on DSV share prices?
I can take that. I think there is a little worry. You're right. I think this is already on the radar of many people, especially over the past months as our study has come out in terms of other major companies looking at this asset. The size, the scale, the economics really puts it in a category for a major company to look at. And I think they will continue to look at it. There is no real share price that we have in mind that we feel comfortable with. All I have to say is, you saw from the charts that Forbes had discussed, silver developers in good jurisdictions. I mean, we're on the #1 silver producing nation in the world on a major belt, so that's about as good as you can get. But they're trading at 1.5 times NAV. Often producers are trading well through 2 times NAV. That's typically how silver is. I mean, and if you saw from what Forbes had noted, we're trading at probably 0.3 times our NAV. So we actually think it's a very relatively simple and executable way to get to those kind of valuations over the next while. But we think there's still much more value to be realized in our share price, much more than we're seeing today. And so we're going to basically be advancing this project because as you de-risk it, your multiple will continue to get better. You de-risk it, your multiple gets better. That's really our focus now, is to de-risk this project all the way to a construction decision. If along the way, Jochen, someone comes with a very, very compelling offer, we'll obviously have to, shareholders are an important part of the decision, but we'll have to consider it. But we have no set way that, okay, we want to sell this. We're really just advancing this to a construction decision. It's the same path.
Okay, maybe one thing in addition to that, because we saw 25% is held by Eric, and you have 30% with institutions. Are those, let's say, 10, 20 institutions, or are those 3, 4, 5 big institutions? And can you comment on some? Are you allowed to say some names? Who is in there?
Forbes?
Yeah, so Eric holds 25%. Like I said, our second biggest shareholder is Jupiter. So they probably own around 10%. And then we have some additional sort of mining specialty funds that are have ownership as well. I think one of our big pushes this year is actually increasing that level of institutional ownership. So one of the challenges we had was trying to articulate the value proposition without the preliminary economic assessment numbers. Trying to translate drill results into valuation is very challenging. Yes. Now that we have a PEA, and actually a number of portfolio managers said to us, come back once you got the PEA out, and then we'll take a close look at the story. And so we only really published the PEA just as sort of Christmas was about to hit, and it had been a long year for everyone last year. But certainly we'll be doing a big push this year to try and get that institutional ownership up to more like 40-50%, which is more in line with some of the silver peers who are more advanced than us. So the Silvercrest, the Mag Silvers. So that's certainly going to be a big push for us through this year, now that we have some really good numbers from the PEA to talk to.
Absolutely. And I think you're quite well protected anyhow, because management holds 10%. As said, Eric is at 25%, and then let's call it Jupiter with 10%. So that's 45%, I would say, in very stable hands. So I think the chance to lose Discovery Silver too cheap is not there. And also I should say I'm a shareholder of the company for here disclosure reasons. I forgot to say that in the beginning. Yeah, let me see. Where is it? I just had a question here. Yeah, can you do some statements on the topics of high energy costs in Mexico, and maybe also, let's say, COVID, Omicron, how you are affected, what's going on there?
Yeah, so I'll give a couple points on that. To be honest, we haven't really seen huge increases in energy costs. And Mexico is one of the most favorable places in the world in terms of unit energy costs. Forbes, what were they? 6 cents?
So yeah, 6 cents a kilowatt hour is what we assumed in the study.
That's a dream for Germans, I can tell you.
Exactly.
And then power represents 20% of our processing costs. Typically, that percentage is normally 35%, sometimes higher. And the reason it's low is it's very easy to liberate the metal from the ore from our project. So we're very fortunate. We don't have to crush and grind the ore up to a very fine grind size. And so as a result, power is only 20%. So it's a low contribution. And in addition to that, at 6 cents a kilowatt hour as well. So, and most of that, it's all locally generated. So we're not beholden to a Russia or any other country locally who may jack up the prices at will too.
Okay, so
I wanted
the COVID stuff.
Yeah, I wanted to finish off on that. So for the COVID stuff, obviously, the one thing I want to point out is this PEA came out in late November 2021. So it's got pretty updated costs, right? Definitely over the past couple of years, there has been inflation across the industry. I feel like a lot of that is already built into the current numbers that we've shown you today. And remember, our PFS we plan to put out this year, so hopefully there's not a huge jump. But first of all, our numbers are very recent, the numbers you've seen. Mexico was hit in the beginning in kind of April, May 2020. There were shutdowns everywhere. All mines were basically shut down. All exploration projects were shut down for about 2 months, and everything got going. We've luckily been able to continue our drills, keep everyone safe. Obviously, there's extra measures that have been put in place. Those represent some nominal cost increases for us as an explorer. Producers probably a little bit more. But it looks like things are stabilizing. My understanding is Omicron has not peaked yet in Mexico. It's on its way to doing that. But to be honest, we haven't noticed very, very large increases over the past couple of years. And the other point, again, to reiterate, is the fact that our numbers that came out already are assuming and reflecting inflation, some inflation.
Okay, super. Let's come to your production situation, upcoming production situation, I should say, as you are still in development, of course. First of all, we saw your timeline by 2023 for the production decision. So let's assume 2023, you do your production decision, it's all positive, all clean and clear, you have the project finance. How long would it take to build the mine? And when could you be then in commercial production? Now, it's a forward-looking statement for the regulators, but let's give us a guess, at least, if possible.
So we have nice mineralization that sits at surface, and it's actually oxidized mineralization, and we can process that via heap leaching. And so what that means is we should be actually producing after about 12 months. And so whilst we're producing that oxidized material on the heap leach, we then are starting to mine the mineralization beneath the oxides, which is the sulfides, whilst we're building out the sulfide plant, such that 2 years in, we now are producing silver doré from the oxide heap leach, and we're now starting to produce silver, zinc, and lead from the sulfide plant. And then we actually use a staged approach in terms of the sizing of the plant. So when the oxides run out, there's about 3 or 4 years worth of oxides. Once they're sort of mined out, the operation then becomes sulfide only. We then expand the sulfide plant. We double the capacity in year 5. And now we're producing north of 30 million ounces silver equivalent. But by delaying that expansion, it means that initial Capex up front is less than 400 million. It's a pretty palatable amount. But yeah, it was sort of a bit of a long answer, but ultimately within 12 months, we're getting our first revenues. And I would really say after 24 months is when you would have commercial production with revenues coming from the oxides and the sulfides.
So we talk like 2025, 2026 latest.
Correct.
Exactly, yeah.
Okay.
But revenue starting to come in 12 months after the construction start. Say if it's Q4 23, you start getting revenues, but really when you get into the peak levels of production for the first beginning is about 25, yeah.
Of course, super. We were talking already a little bit about financing of those 400 million. So I could imagine that you need a lot of heavy equipment. Could you imagine also to say, like, shouldn't say names, but I know Caterpillar, Komatsu, they're all providing, let's say, leasing fleets and stuff like this. Would that be something which would help you a lot to put a financing package together?
Well, for example, for the mining fleet, we've assumed, which is usually a very substantial cost. Our viewers might not be aware, but contractor mining is very common in Mexico, probably one of the most common. So we've assumed contractor mining. So that means the unit operating costs are a little higher, but you don't have the upfront capital of paying for the fleet. So we've assumed that. And again, it's probably in terms of mining costs, Mexico is one of the most favorable countries in the world per ton. For the other items, listen, we're gonna be putting our schedules together this year in terms of long lead time items. But what I really like as a metallurgist, as a process engineer, is how simple the flow sheet is. It's crushing, very simple, easy to get crushers, and then there's the ball mill. There's no sag mill. Typically, you have a sag mill to bring the size down, and then a ball mill to make it even finer. As Forbes pointed out, because it's so easy to liberate these minerals, they're so coarse grained. You don't have to crush them. You don't have to mill them as fine. So your milling component of your flow sheet is much smaller than typical. So you just have a ball mill and then on to the flotation circuit. So the simplicity of the flow sheet is very impressive to me. Definite advantage here. And yeah, we'll be looking during this year as the flow sheet starts becoming more finalized to start thinking about long lead time items and ordering those. Forbes, anything else to add on that?
No, I think that covers everything off quite nicely.
Okay, super. Then I see a question here just coming up. How many meters of drilling are you planning for this year to further de-risk the project?
Still finalizing our budget. We'll put out a press release probably at the end of this month. So last year we drilled around 60,000 meters. I think we'll probably have a similar number for this year, 60,000 meters. And that's going to be a combination of infill drilling, so tidying up the drilling within the pit, as well as resource growth drilling. So looking at areas, especially as one part of the deposit where we're seeing some good signs of potential areas to grow the resource. And then also we have 5 property-wide targets that we've never drill tested before. There's just been a couple of holes historically put into these targets. So we want to drill test those through the course of the year. So probably 60,000 meters is spread across those 3 main areas.
Okay, super. We saw in your resource statement 260 million ounces measured and indicated and 120 million in addition around. The global resource is 1 billion silver equivalent. So what would be steps, let's say, to bring the rest up to the 1 billion ounce also into production? What would be needed there?
Really, Johan, I'll let Forbes also touch on this, but really, yeah, the numbers you mentioned, I believe, were 280 in measured and indicated and 120 in inferred. That's outside of the pit. So what I also, and that's actually a point I wanted to bring up, thanks for bringing it up, is the numbers, all that you saw, were really just the PEA pit. So there's close to 400 million ounces silver equivalent outside the PEA pit. And really, Johan, those are already drilled off. They're already in, we probably have to, obviously as you move towards construction and production, you'll tighten up your drilling, but they're very de-risked ounces. They're just outside the pit. Really, it's a function of silver price. And we think as you get into the high 20s from our work internally, those start becoming economic. And so, you really could have a case where you're doubling the production. If silver goes towards 30 and beyond, you could conceivably, from the numbers you've seen, double the production or double the mine life. It's, if you want to increase the throughput, or you double the mine life to 25, 30 years. But it's a really, for the silver bulls, it's a very compelling case because there's no other project really like that. Again, as Forbes pointed out, there's not a lot of projects that are open pit silver projects. Silver is very, very, very typically underground. So you're either in ore or you're in waste. We have the very nice advantage in terms of optionality, scalability, which I talk about, and leverage, that the rest of the pit, the rest of the material that's outside of the pit is a natural pushback. You would already be doing what you're doing, and then you can expand it, and you can expand it further. So it really puts us in a good position to have that optionality. A lot of peers are not able to have that. Forbes, is there anything else on that?
That's good. You covered everything off there.
Super. Where do you see the biggest risks for discovery, let's say near term and also in the future, if there are any?
Really, I want to point out that, like I've noted before, is the story is very simple, and the metallurgy is very simple. It's always a risk. This metallurgy is very simple. We've tested it. Like in our PEA work, we basically have the metallurgy to a PFS level already. For the PFS level, we want to basically be to an FS level. We're always trying to be ahead of the stage we're at in terms of de-risking the project. So I really think it's a simple story, simple asset, good jurisdiction, just executing. And really, are there labor shortages in Mexico? Listen, there's a lot of companies coming up, and silver's getting big. Mexico's a silver country, so there's a potential chance labor shortages. I don't foresee it because the town that we are near has a very high unemployment rate, and many of the people come from mining families. They have that skill, that expertise. But it's something we will consider, and also attracting top talent, right? As you want to build up your team, we eventually want to hire a very high level operating team. So acquiring that high level talent is going to be important. And those are the things for me. I think it's simple, it's executable, but building up the team to be able to progress this project is an important thing that we have to definitely to work on this year. Forbes, is there anything else that sticks out to you?
Look, I think if you look at various buckets, we've got the technical risk, which we feel we've dealt with all those key items in the PEA. We'll continue to obviously advance those as part of the PFS. But we feel like we've largely de-risked the project there. You then have your permitting risk. There's a very sort of clear and transparent permitting process in Mexico. It usually takes about 12 to 18 months. So we'll be starting that process probably midway through this year. We're still finalizing that timeline. From an ESG risk point of view, if you call that a risk, I mean, a lot of times it's more an opportunity. But I would highlight we have been very proactive. We're an earlier stage company. We're not producing yet, but we actually published our first inaugural ESG report last year. And we're going to continue to be very focused on that. The other nice thing is there's actually not much in the way of local communities or, we're in a very sparsely populated part of Mexico. There's a couple of sort of private ranch owners who basically own the land around the project, and that's about it. And then the last bucket is probably the financing risk. And so that's more a risk probably for next year once we got our pre-feasibility study done, and then we're starting to have more chats with lenders. And that's always subject to largely the silver price. So obviously if we get silver sinking back below $18, $16 an ounce, it's going to be very ugly for everyone.
No.
But if it obviously continues higher, then that financing risk is largely eliminated.
Okay, super. There was also a question I forgot to ask you about ESG, how you have implemented it, but you said it already. You are doing a full ESG report, so I could imagine that you are fully complying, right?
Definitely. We actually think we're one of the first companies as a non-producer to be able to be put out our ESG report. There's not many companies out there. It's always been a major focus for us. You'll see our ESG report we put out in October. It's a really good we've received actually emails from other companies and investors saying what a great report it is. So I definitely encourage viewers to go look at that. But it's always been a very important component for us, and will continue to be. I think that the point that Forbes made is we are really active in the communities around us, and they're so engaged, Jochen, on this project. They want this mine. They know the jobs it can create, the revenue it can create for the area. That is the one thing I think Mexico is fantastic for, is that people are really can realize the benefits of mining, and it makes the process move so much quicker. It's in their blood, in their DNA, mining, right? It's a pillar of their economy, and the people, when they really believe in a project, they really help. So we're lucky enough to be in that position where we are.
Yeah, and you always have to fully respect the environment, because otherwise you are in big trouble with the communities. That's right.
100%.
Yeah. Absolutely. As we see already on your screen here in the back, you are OTC listed, and there is a question: are you planning to do a major listing in the US? Let's say NYSE, whatever.
We now that we've got the PA file, it's something we're going to be taking a look at. So we weren't really in a position to upgrade our listing in the US until we had that report done. So it's a trade-off, really, between the regulatory burden, the increased legal costs on one side versus obviously improved liquidity, improved visibility on the other side. So we're sort of going through that internal pros and cons right now. We're chatting with other companies. Some companies have had a positive experience with it. Others have found it's been a huge headache.
And it costs a lot of money, of course.
Yeah, it costs a lot of money. So we can't commit to anything right now, but it's certainly something we'll be evaluating over the coming months.
Super.
Yeah, I would say, just to add color on that, Jochen, it's definitely on the radar. Like Mag Silver's done it, and I think it worked out very well for them. Silvercrest as well, and several other companies. Listen, and when silver really moves, the U.S., those Americans love their silver, and so it can be a really, really beneficial if we time it at the right time. It's definitely on the radar for us. Right now, we're trading about 1 million shares a day. About 2/3 is in Toronto, on the Canadian Toronto TSX Venture, and about 1/3 is in the OTC on QX in the US. That probably would switch, if we went to the big board. I think so. That's what we've seen before with precedent situations. We're also even considering moving to the big board of the Toronto Stock Exchange, not just in the venture, but moving to the big board. So these are all things that are on our radar. We're trading pretty well now. I saw some comments on the chat about liquidity. We're trading quite well, but it's something we always have on our radar to think about in terms of upgrading.
Okay, super. What are the most important catalysts for the next 6 to 12 months?
Yeah, so in a very simple high level, it's going to be getting the PFS out, which is the 3rd quarter of this year. In that meantime, just so everyone knows, I didn't really mention it in that chart I showed in terms of timeline. Every month, 6 weeks, there are going to be drill results that continue to focus on, as Forbes noted, the main pit area, but also the regional package we have. I mean, if there's a brand new discovery on this package, it could really add some, very exciting sizzle to the story. So drill results will be important. The PFS is the major catalyst. As well, in the background, we're going to be continuing to move towards construction. So we'll be permitting. So all of the times, the milestones related to that are going to be important. And then in 2023, the big one will be the feasibility and construction decision.
Okay, super. So then let me see. I have a question also regarding your 19 million options and your 34 million warrants. I saw in the presentation the options are due at 98 cents and the warrants at $1.13 as an average, if I saw that correct. So when are those options and warrants mature? And wouldn't that help you a lot to really finance, let's say, the near-term future? Because if we take that together, we are talking easily about $50 to $60 million.
Correct. So that's a great point. We didn't mention that as well. Thanks, Jochen. Our warrants will all be expiring this year. about 70 or even more % of those are owned by the top 3 shareholders. That's very helpful, in good hands. They're all in the money. And the options out of the 19 you talked about, I think only 4 or 5 expire this year, so it's not going to be huge, but these are all owned by insiders, of course. And definitely then I think more come out the next year, obviously, as options go. But warrants will be done by this summer, and options will obviously every year there'll be batches of them. But it very much allows us to bolster our treasury in a very positive way as we move towards the construction decision.
Fantastic. Analyst ratings. What are the analysts saying about your company?
Forbes.
We have three analysts covering us: PI, Financial, Claris, and 8 Capital, and they've all got buy ratings and target prices. Off the top of my head, Taj, it's sort of ranging around the sort of $3-4 range, if I recall correctly. And then and look, there's been a number of analysts now that we've put out the PEA who are taking a very close look at the story. So we're hopefully going to pick up some more coverage here over the coming months as well. But the 3 analysts who cover the stock, they were very happy with the PEA results, reiterated all their buy ratings and their target prices on the back of the study, which was great.
Fantastic. Yeah. Also, my point in figure chart shows $5 to $6 as a first target, which I should say also.
Okay.
I just a note. I don't know how I remember these numbers, but PI is at $3.75, 1-year target price. 8 Capital, who were a top pick for, is $4, 1-year target price, and I believe Claris has upgraded their target price when we put the PE out to either $4.25 or $4.50. So all very strong, very good 1-year performance targets, and all strong buys. So and again, as Forbes pointed out, we probably will continue to get additional analyst coverage this year. Found it difficult in COVID, as you know, Jochen, to travel. Many analysts, both Forbes and I were analysts before. They will not initiate unless they go to site. So that was obviously caused a little bit of slowdowns. But I think this year, once travel gets going again, we're definitely going to be having, analyst site visits, etc., which should further put, positive attention on discovery.
Fantastic, super. So let me check on my notes. We have all answered here. Also here, yeah, that is all fine. Oh yeah, by the way, revenue zinc 25%. I mean, we saw $1.45 you had in your scenario also and it was the highest one. I think zinc is today at 165. And I spoke, I think it was 2 weeks ago with Robert Wares from Cisco Metals. You know, Robert Wares is, I would say, really somebody who understands zinc fantastically. And I think you wouldn't find somebody more bullish on that. He said to me, zinc can go easily to $2 to $3. So, I mean, that would really shoot your project also, right? That would be fantastic.
Exactly. Listen, zinc has always been within a range. I think we see $1 to $1.40, and then it stays around there. But something in the past couple of years, Jochen, I mean, I think it was 175 at one point this year. We used Forbes in our base case zinc price. We used 120.
Correct. Yeah.
And so, like as you showed from that sensitivity chart, you even had moved to 140, 145, as you noted, is huge. In addition to silver, but it's really. I was reading several articles about it. Zinc is a metal that nobody really realizes, but there's going to be significant shortages for zinc moving forward in the next couple of decades. Mine production can't even keep up with it. So who knows what we could see for zinc price, but it definitely could be a very nice surprise for us.
And honestly, I have the same feeling for silver because when we see the projections from the Silver Institute, for example, that is really crazy. By 2025, they say approximately 93 million ounces additional annual demand for e-mobility alone. Yeah, and if we look around the world with all those solar plants in building, I think we are now at something like, for the next 5 years, we talk about 500 to 600 gigawatts, even in large projects. Yeah. So my feeling is the same could happen quite soon with silver.
Oh, like silver, yeah, all of the statements I made about zinc is silver. Everyone knows something is going to happen. It's pretty much ready to happen. We know that there's 250 to 300 million ounces of additional over the next decade of additional silver we're going to need for just 3 applications, as you mentioned: solar, 6G networks, 6G networks, and then electric vehicles. That's pretty clear. So which bodes extremely well for silver. But zinc is the one that nobody thinks about. That's why I mentioned it. It's like all of us, this could actually be very significant. But no, for silver, I think it's very obvious. The fundamentals are there, as you noted. Gold's close to an all-time high. Copper, all of these metals are so high, and silver is sitting at 50% of its all-time high. Something is, as we all know, we could get into it, but something is going to
really
change.
Going on. Yeah, definitely. Yeah, that's right. Super, gentlemen. Thank you very much. There was a great almost an hour here. And as I said, your company is really clean and clear. And so I would say just deliver as you did in the past. And we're going to have a lot of fun with your share price. Josh and Forbes, thank you very much. Enjoy your day and hope to talk to you soon.
Thanks, Josh.
Thank you very much, Owen. Thanks to all.
Yeah, thanks, ladies and gentlemen. Thank you very much for participating today in the Discovery Silver virtual online roadshow here with Swiss Resource, with Tash, Forbes, and myself. And I think you saw it at approximately $2.10, $2.15. I would say this company is really still a bargain, to be honest. Our own price target here, based on point and figure charting, is $5 to $6. And as you know, we are really silver bulls. Today, silver went again through the $24 mark. Something is definitely going on here, but also zinc prices are really going to new all-time highs. As we know, the stocks in zinc are down, I think now worldwide, to approximately 4 or 5 days. This is like nothing. And I have a good feeling that silver will move quite soon in the same deficit pattern. And so for that, we are very, very bullish for silver. We are bullish for copper, gold, also because of inflation, and zinc in addition. So I would say this is a fantastic foundation for Discovery Silver. Stock price has not moved too far. I'm a shareholder of the company, and I really can advise you, have a very, very close look onto this fantastic company. $70 million in the bank, and probably through warrants and options within the next year, this year already, and also next year, probably another 50 to 60 million coming into the treasury. So they are well cashed, well financed until they do their production decision and also the feasibility study. I think it couldn't be better. Mexico is the mining country, under the top 3 in the world. So I would suggest check it out. Thanks for watching us. Stay healthy. All the best. And by the way, Happy New Year. Thanks and bye-bye from Switzerland.
Thank you.
Super. Tash, Forbes, thank you.
Fantastic.
Take care.
Thank you.
Talk soon to you.
Okay.
Bye-bye, guys. Bye-bye. Cheers.